Hello everyone, welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 14th of March, 2024. Alright everyone, let's get into it. So the blobs are finally here. Dencun has been activated on the Ethereum mainnet successfully. It was quite an uneventful kind of upgrade. For those of you who are watching the live stream, we were kind of going through the live stream agenda, going through all the questions and giving our own little presentations, and then the fork happened, and then we just continued on. There was literally kind of no fanfare around it at all, really. Everything went smoothly, and again, it's a testament to the work ethic and to the amount of, I guess, like, people that have worked on getting 4844 or blobs generally shipped to the Ethereum network. It has been a long time coming. As you guys know, it's been years of this that has been in development, and it really is just the first step in a new era of Ethereum scaling. And I've talked about this at length on the refuel before, but blobs really just represent kind of the prototype of what dank sharding can give us. That's the whole point of why it's called proto dank sharding. I mean, there is a play on words there as well, because one of the people that came up with it is named Proto Lambda, so it was just a nice little play on words there, but it really is just a prototype of what dank sharding can actually look like, and then we're going to be progressively adding more and more things. Obviously with blobs we can increase the size of them at different hard forks if and when we need to, but then we've also got things like peer DAS or peer data availability sampling hopefully coming at some point, maybe even in Pectra. It could be, as early as early next year, which again brings a huge scalability upgrade to Ethereum, because it means that not every node will have to store every blob, and that brings with it, I don't know what kind of like multiplier it brings, but it brings with it another kind of, maybe it's an order of magnitude kind of a difference in fees here and more scalability. Now, of course, I'm sure you've all seen the screenshots that the people have been posting about the fees on L2s and how they've dropped pretty dramatically. I know that I said for the longest time that we should just wait until Dencun goes live, until blobs go live, before we start looking at fees and start speculating about what the fees are going to look like. But it seems like Optimism's fee estimator was correct. So you can see here this tweet from Jesse Polak doing a transaction on Base. So before blobs went live, it cost 31 cents. After blobs went live, it cost less than a cent. It cost 0.0005 cents. Now, of course, as I said to you guys, the fees would drop dramatically, initially for blobs, because we basically reset the fee market to zero, essentially, like as I've explained before. The fee market is separate to the normal L1 fee market for blobs. So right now, the L1 fee market is 40 Gwei, but for blobs, it's considerably less than that, probably 1 Gwei or less. And then that reflects in the fees that are being paid on L2s here. So yeah, I mean, it obviously feels really, really good to see sub-cent fees on L2s, because L2s are Ethereum. And it's kind of amazing that we can actually have that now, even in the face of the really high fees on L1, right? Like the blob market is not influenced by the L1 fee market anymore, which is great, because it means that it's not influenced by the fluctuations in the L1 fee market. It's got its own separate thing, and it's been purpose built to host blobs. So that's been really, really cool to see. In terms of support for blobs, a lot of the L2s had support out of the gate, pretty much. Like Starknet and I believe ZK Sync had support pretty much out of the gate. The OP stack followed shortly after. Arbitrum is going live, I think today. By the time you watch this the refuel, it's probably already live. And then they also have their own additional fee reduction upgrades going live on March 18th as well, which should bring fees down even further there, which has been great to see. Now, if you want to track the progress of fees on L2s, you can go to Growthepie's new tool here, which I'll link in the YouTube description below, but they're tracking the median transaction costs in US dollars on different L2s, and you can see here what it was before blobs went live, and then what it became after blobs went live. Now, of course, some of these aren't live yet. So you can see Arbitrum obviously is not live yet, as is not using blobs yet, I should say. But Base is, and OP mainnet is, Starknet, ZK Sync, and Zora all are. Linear and Arbitrum still got to upgrade there. But yeah, you can see here that on OP mainnet, the median fee is like 0.007. Starknet, it's about 1 cent. Base, it's about 0.002. So yeah, a substantial reduction in fees, and it's just kind of crazy, like the fall off that you can see here. Like, look at that fall off there. Like, Starknet was first out of the gate, and then you got the rest of them falling off. I mean, I'll link this in the YouTube description below for you guys to kind of check out here. But I heard there was an analogy given last night on the live stream about what this actually looks like, what blobs actually are. And you can actually imagine it as the entire, I guess, Ethereum network is a highway. And let's just say we have like 5 lanes on that highway. Now, what we've done by adding blobs, we've added a dedicated bus lane to that highway. So now there's 6 lanes, but 5 of them are used by the normal L1 transactions. And then there is a 6th lane, which is a bus lane, which is only able to be used by buses, or in this case, by L2s using blobs. Now, L2s aren't the only party that can use blobs, but I guess the bus lane in this analogy is blobs, right? So that's why there's been such a substantial reduction here in fees. Now, I do want to say with regards to fees, I did put a tweet out where I said, while blob-enabled L2 gas prices are very cheap right now, we can expect them to increase a bit over time as demand for blobs increases. This is expected behavior and is why 4844 is only the beginning. Blobs are an evolving primitive and a part of the wider dank sharding roadmap. Now, I've talked about this so many times on the Refuel, and it's kind of funny because there was a bit of dunking going on Twitter with people saying, why are you cheering for blobs being so cheap? You just know they're going to get expensive again at some point. It's like, okay, for starters, yes, I mean, we do know that, or at least a lot of people already know that. Maybe the people that don't pay much attention don't know that. And 2, let us have this win. We actually just brought fees down substantially, and we've already said this is just the beginning. This is not the end state. This is really just a prototype of what full dank sharding can kind of look like here. But it is true, obviously, that as demand for blobs goes up, the fees are going to go up. That's just how any blockchain works. As demand for block space goes up, the fees go up. And we've seen this across every single chain that has ever claimed to have low fees. Originally Ethereum had low fees. It was funny because back in the day, Ethereum was the low fee chain compared to Bitcoin because Bitcoin fees were high. Ethereum came along and had low fees. Then demand went through the roof and Ethereum fees, aren't low on L1 anymore, right? Same happened with, I remember Avalanche was all about having cheap fees on their EVM chain, and then they went up as well. Even Solana fees have gone up, right? I know they're still cheap. I'm not going to say they're not cheap. Of course they're cheap, right? They're sub-cent transaction fees a lot of the time, but they've gone up from where they were. So if you started at basically free and now you've gone up to maybe 1 cent or maybe half a cent or something like that, that is a substantial increase in fees. And if demand keeps going up, that means fees are going to keep going up. And I know they're working on a bunch of stuff to fix their fee market and make things more orderly, and it's great that they're doing that because we obviously want to see efficiency gains across the board in crypto here. But the main overall point is that it's all supply and demand at the end of the day, and right now the supply of blobs is relatively limited. We did that on purpose because we wanted to make sure that we didn't overload the network. We want to let it bake for a bit, and then of course we can increase the supply by increasing the size of blobs as time goes on, while also adding nifty things like peer DAS or data availability sampling generally in order to greatly scale that by orders of magnitude, which is just crazy to think about. The fact that we've got, many, maybe not many, but a few more orders of magnitude increase in scalability left, which for those of you who can't maybe visualize that or can't kind of put numbers to that, that could be another 100x kind of scalability increase in the next couple of years for Ethereum here. So we've really just laid the groundwork with 4844. It's our base. It's our kind of I guess if you're building a skyscraper, it's the foundations of that skyscraper. We've put them in place, and now the rest of the building can go up relatively quickly as opposed to the base. We need to make sure the base was solid, and that's what we've done with 4844, along with some of the cryptographic primitives that came, such as the KZG ceremony, which is going to be really important for things like peer DAS. And for those of you who don't know what peer DAS is, you can Google it. There's some research posts on it. I've discussed it before, but it's a peer, PEERDAS, peer DAS. You can Google it and you'll find the research post there, but that's also coming. So I guess the point here is don't be surprised to see that these cheap fees as they exist today are going to slowly creep up over time as demand increases, as more L2s use blobs. Arbitrum isn't even using blobs right now, so that's going to play a factor in it as well. But I've also discussed this before, and I've actually written about this. I think I went back and I looked. It's over 2.5 years ago, or maybe 2.5 years ago. I wrote about this in the Daily Gwei newsletter, where I called Ethereum's design the grand design. The roll-up centric roadmap I consider to be the grand design of blockchains, because obviously you guys know I'm a modular blockchain maxi. I don't believe in the monolithic blockchain vision as being long-term sustainable. I'm all about the modular stuff. And back then, even in that post, even though some things haven't aged as well because things change as time goes on, even back then in that post, I basically alluded to the fact that with the grand design, with the roll-up centric roadmap, we basically get all of these L2s that get to kind of scale on their own, basically on their own as their own L2, scaling the execution side of things. And then we scale L1 through data sharding for the L2s. And then because we're scaling for the L2s and the L2s are basically businesses on top of the L1, we can have a really orderly settlement layer, because the way that L2s use blobs is not going to be sporadic like people use the regular fee market. Because one thing that I wish that Ethereum had and is working towards is a proper multi-dimensional fee market. And what that means is that each part of the fee market would be segmented into its own little bucket depending on the high level use case. So obviously we have that now with blobs, but that's just for blobs, right? And then it'd be nice if we had it for like other things within the other opcodes, I guess, so to speak, or other parts of the fee market, because that would really improve efficiency across the board. Because right now, outside of blobs, the rest of the fee market, the normal L1 fee market, that's not orderly at all. It's really just random. I mean, it's dominated by MEV, but it's not orderly. There is just so much going on. It's basically chaos. Whereas with blobs, it is in, I guess, like all of the best interest of the L2s, and it is economically incentivized for it to be very, very orderly. And because it's going to be an orderly transaction mechanism there, an orderly fee market, it means that the fees themselves should be much more predictable, and they shouldn't suffer from like massive spikes or anything like that, just by the nature of blobs, which is something that I'm super excited to see play out over time. But yeah, it's only been about not even 24 hours since Dencun went live. As I've said to you guys, I want to see this bake for a couple of months before drawing any kind of long-term conclusions on this. But it is great to see the Ethereum community be really, really excited about the fact that we've dropped fees so substantially, and the fact that this really is only the beginning. It's just the first step. There's more and more scalability increases coming now, and the fact that 4844 really lays the groundwork for the rest of the dank sharding roadmap, which is the way Ethereum scales at the end of the day. And I know that there are other issues we need to solve with L2s, such as fragmentation, such as making it so that in the wallet you don't see like 10 different versions of ETH across 10 different L2s. I understand that. Like, obviously those are user experience issues that we need to fix, and that's being worked on in parallel. That's the powerful thing about the Ethereum ecosystem. It's not a sequential thing. It's not like, okay, we're going to do this now, we're going to do that later, and then we're going to do this another time. No, it's, okay, we're working on everything in parallel, and then whatever looks like it is relatively ready for a network upgrade, we're going to input that into the network, during the next kind of hard fork. And we've seen that play out, obviously, over the last few years, especially in the Ethereum ecosystem. But even outside of that, outside of Ethereum network upgrades, which obviously require a hard fork and massive coordination to accomplish, we have all of the L2s doing their own upgrades to their networks. We have all of the apps doing their own upgrades. We have all of the interfaces, all of the other infrastructure. So it's all working in parallel, in tandem, just for the betterment of bringing everyone on chain into Ethereum. So I'm just loving seeing that there. Now, in terms of tracking which L2s are using blobs here, you can go and view this dashboard from Dobby. He's also got a nice little kind of tweet he put out today where he said 6 chains posting blobs so far, and here is where each one started. So he basically shows you where each chain started posting blobs on his tweet here. So you can see here, ZK Sync went first. I didn't know that. I actually thought Starknet went first, but ZK Sync apparently went first here, then Starknet, then OP Mainnet and Base, and then Zora and Mode came later here. And then you can go view this dashboard for yourself to see other details on this. There's also other things in here such as blob fees per hour, blob submitters, blobs posted, and so on and so forth, which is really great to see that there. Now, as there's another tool here you can use as well called blobscan.com, which I think I've covered before. This will show you a bunch of different metrics around blobs. You'll be able to search for blobs and KZGs and stuff like that. Check out the stats, like the various different blob metrics here. It's got a really cool stat I saw just before. I think I don't know if it's on the front page here, but basically there were metrics around like how much fees were saved, or how much kind of, I guess, like, oh no, I think it's on the front page. Yeah, total transaction fees saved. So that's obviously going to build up over time, but it's going to be interesting to see what that looks like. But I am actually really curious to see how the blob market kind of evolves over the next few months, and if it does reflect an orderly kind of market like I think it's going to reflect, because there's no reason for it to be a market that spikes up and down, because it's expected about what's going to be posted to the blobs, right? We already know it's going to be the data from these L2s. from these rollups, I should say. So we like just like we don't. It's like basically the opposite of the normal L1 fee market, where we don't know what to expect. I mean, you can have reasonable assumptions that okay, well, if the prices of assets move violently, then we can expect a lot of MAV arbitrage to happen. We can expect an uptick in things like sandwich attacks potentially. We can expect an uptick in liquidations. We can expect an uptick in just overall transaction activity. But when it comes to actually kind of having any really kind of certainty around it, yeah, it's not really something that we can have certainty around, whereas with blobs we can, because they're used for a very, very specific thing here. So yeah, but I think that's the last thing I had to cover with regards to blobs. But just want to say again, a huge kudos and thank you to all of the people who worked on getting 4844 to mainnet. It was a huge lift over the last couple of years, especially. There were teams working on it from everywhere, you know, Ethereum Foundation, all the Ethereum client teams, and you know, their respective kind of companies that they work for. You had Coinbase, obviously a huge part of it as well, you know, with their whole base initiative, but they were one of the first players in this, and all of the independent people that worked on this and did analysis on this, and all of the people who built infrastructure around it, you know, all the people who were building metric tracking tools like Blobscan, obviously Dobby as well, as I showed before, Growthepie as well, like L2 Beat as well with their DA page that they've got up that I showed yesterday. There's too many people to thank, but I just wanted to give a heartfelt thank you to everyone, because this was the biggest upgrade since the merge. It went so flawlessly, so smoothly, so it was so boring, but at the same time we like that. We like that it's boring, because at the end of the day, we don't want anything exciting to happen during a hard fork, because it means something went wrong, and obviously we don't want things going wrong. So yeah, just wanted to again say huge kudos to everyone, and I guess like to all of the people watching and listening to my episode today. You obviously are on-chain users, so I hope you are enjoying the cheap fees. I know I am. I've done a bunch of things on-chain since Dencun went live, and I'm really enjoying the cheap fees. Honestly, it just kind of breathed a fresh kind of like breath of fresh air into Ethereum again. And I actually put a tweet out today where I said that this 4844 blobs, they basically act as like a stimulus package for the Ethereum economy when it really needs it, because I can't think of a better time for blobs to go live, because we're obviously expecting a lot of new people to come into the ecosystem over the next, I don't know, however many months this bull market lasts for, maybe another year or something like that, and they're going to want to have cheap fees. They're not going to go to Ethereum L1 and use Ethereum L1. And obviously there are other L1s that they can use. You know, Solana is very popular right now with the meme coins and things like that, and that's what retail really loves. So you know, people go there. But like the thing is that obviously Ethereum L2s are competing with Solana. So now that I think they're on basically equal footing here in terms of what they're able to kind of service, or what users they're able to service here. That's debatable. I know someone's going to call me out for that and say no, they're not on equal footing. They still have multi-sigs and they still have kind of a centralization and centralized sequences, and it's like, okay guys, like it's one step at a time, and also that's orthogonal to fees, I think, when you really kind of think about it there. But I'm so tired of all those arguments at this point. All I want really is just to see more and more people come on chain. I want us to do it in a safe, secure, and sustainable way. I want us to build these things in that way, and I think Ethereum is doing that in spades. Like, it's just doing it so beautifully. The rollup centric roadmap is really taking shape now, and we've turbocharged Ethereum from today, and I just can't wait till we get more of the upgrades coming to blobs, such as PeerDAS and other such things like that. I'm very curious to see where that leads us, but I'm also curious to see how quickly fees start getting expensive again on blobs, and if we could do maybe like a, I don't know, maybe we can do like a hard fork outside of Pectra, where it's like just a blob specific fork, where we basically say, okay, we want to increase the size of blobs, let's do that. Or maybe in a few months we decide to increase the gas limit, because we've noticed that the network can handle the increased load of blobs, and people are okay with increasing the gas limit by like 50% or something like that, which should help overall with scalability as well there. But anyway, that's enough about blobs. Last thing I wanted to mention here is that I don't know if Optimism heard me yesterday, but I was complaining about the fact that they don't have fraud proofs on their network yet. And it's been such a long time, and I really want them to have fraud proofs as part of the OP stack here. Well, Calvin Fichter, who works at Optimism Labs or OP Labs, said that they're going to be shipping permissionless fraud proofs to the OP Sepolia testnet in 6 days. So great to see that, honestly. I mean, obviously that's just testnet, it's not mainnet yet, but testnet is the first step towards mainnet. So I hope that mainnet is coming shortly after that. But as I mentioned yesterday, I do believe that the OP stack is going to be able to choose from both fraud proofs and ZK proofs, and it's going to be interesting to see which kind of proofs that they decide to go with, they being the OP stack chains, because right now ZK rollups are still more expensive because proving costs are very expensive, so they're more expensive than optimistic rollups right now, and you can actually see that reflected even post blobs, as I showed before. I mean, I showed you on the Growthepie website. Oh, where? Okay, the website that I was looking at has crashed. Okay, it's crashed here. But on the Growthepie website, you can actually see here that for an average transaction cost on Starknet, for example, is around 3 cents. Yeah, and an average transaction cost on Zora is 0.04 cents. I don't think this was updated though. That's why I'm a bit disappointed that the site actually died here, because I wanted to show you guys what this kind of looked like here. But I mean, you can go look at it for yourself when the site's back up. But yeah, ZK is the proving costs are still quite high. So that means that they're more expensive. Not that much more expensive, but they are. But that's going to come down over time too. Like that's not a long-term block or anything like that. But yeah, I'm very curious to see how long after these fault proofs go live on Sepolia or OP Sepolia, how long until they go live on mainnet here. All right, that's it for everything L2 and Blob related. Two last things to talk about with regards to Ethereum staking. So two major announcements. So first one comes from Ether.fi. So they published this post titled "Staking is just the beginning," where they basically step through their medium to, maybe long term, I guess like more medium term roadmap of what they're actually planning to launch here. So their vision is to develop a suite of 3 integrated products: Stake, Liquid, and Cash over the next 12 to 24 months. The first product obviously being Stake. It's the first liquid native liquid native restaking solution, which made it easy for users to restake their ETH on EigenLayer. A lot of you have probably already kind of used that there. The next product, which is launching on March 18th, is called Liquid, which is a managed DeFi strategy vault that deploys users ETH, EETH, or WETH into DeFi to earn the highest quality rewards with managed risk. That's pretty cool. That's actually a pretty cool product, because I know a lot of people I want to take on more risk and they want to get more rewards for their staked ETH. Well, now Ether.fi is basically just bringing that in-house and saying, you know what, we'll have a managed vault and we'll do it for you guys. So very cool there. And again, disclosure, I'm an advisor to Ether.fi, guys. As you guys know, just forgot to say that before. And then I think this is the most interesting product that they're actually coming out with, though. Over the next 12 months, they're going to be deploying something called Cash, which is a real-life spending account that allows users to spend and borrow against their Ether.fi balance in the real world. That is something that hasn't been done before at scale, I don't think. And maybe not even just like at scale, but just even outside of scale. You can see here that this is going to include a mobile app MPC wallet that connects to users' Ether.fi account and a credit card that users can load with their Ether.fi balance. And they said, to support this, our plan is to create a payments L2 with built-in handling for payment disputes and many other features that are table stakes for consumers when it comes to payments. Cash is still in the very, very earliest stages of development and will continue to evolve over the coming months. That, I think, is the coolest thing that they announced, to be honest, because not only are they building a payments kind of app backed by your Ether.fi account balance, but they're also building an L2 to manage all of that within the Ether.fi ecosystem. I'm not sure what L2 they're using or what kind of, I guess, L2 framework they're using. I'm assuming they're not going to use their own, they're going to build their own from scratch. Maybe they use like the Polygon CDK or the OP stack, or maybe even an Arbitrum Orbit L3 or something like that. We'll have to see what kind of happens there. But yeah, that one there is probably my favorite from the three here in terms of products. But you can go check out their full announcements. I'll link in the YouTube description below. But kudos to Ether.fi for kind of outlining this roadmap, because I think it's really exciting for people to get to read this and see what they've got cooking, because Ether.fi is not just your average liquid restaking protocol. They have a lot of stuff they're working on and a lot of stuff up their sleeves as time goes on here. Now, speaking of staking, last up here is an announcement from Swell. So they were teasing an L2 last week, and last week or the week before, it probably was last week or maybe even earlier this week, and I speculated that it was an L2. They didn't tease the L2 yet, but I speculated in saying, okay, well, I think this is an L2, and I didn't have any kind of inside knowledge on this. You guys know I'm an advisor and investor in Swell as well, but I didn't talk to them about this. I didn't actually know that this is what they were going to do here, so it was a kind of a surprise to me as well. But they're building a L2 for restaking. So they say here, Swell's very own ZK EVM powered by Polygon CDK and built in collaboration with EigenDA and AltLayer, and will be underpinned by Chainlink services to help kickstart DApp adoption. So you can read the full announcement post here, which I'll link in the YouTube description below. But the fact that they're building this on Polygon CDK, with Polygon CDK is really bullish, I think, because it means they get to plug into the ag layer, or the aggregation layer of the Polygon ecosystem. And as you guys know, that is the interoperability layer that's going to be sitting basically at the base of all of the Polygon CDK chains, and basically allow interoperability and composability between all of the Polygon CDK chains. And that means that if you're on any of the chains within the Polygon ecosystem, you can tap into Swell's L2 and still use the same balance across all of the other L2s as part of the Polygon, I guess you could call it superchain or something like that, right? Which is very, very cool here. So I thought this was a cool announcement, because obviously staking on L1 is very expensive, even as just a liquid restaker. It's not just only for solo staking and things like that, but obviously Rocket Pool is also expensive. But then you have other options to stake with these platforms. So you can just buy the LST, which you can already do on L2s. But then if you want to actually stake with these things and not just buy the LST, you actually want to be part of the ecosystem and stake with them, then it becomes quite expensive. So getting an L2 spun up and being able to plug into that and being able to do it all with cheap fees is the way forward here. So yeah, I guess congrats to Swell for I don't think this is live yet. No, it's definitely not live yet. But congrats to Swell for kind of announcing this and working on it. I know it's probably been a long time coming for you guys, but it's great to see that the Ethereum staking ecosystem is not slowing down at all, and the various kind of staking products are looking to innovate way more than I think the previous ones kind of have. I mean, not Rocket Pool. Rocket Pool has really innovated a lot. I think Lido, as big as they are, have been slow to innovate, I would say. They're innovating on different kind of, I guess, products than the other ones are. They're moving slower just because of their size as well. But this is what I meant by, when I said ages ago that competition breeds innovation, breeds, better, I guess, solutions for end users. And that's exactly what we're seeing here within the staking space and the restaking space, as well as the L2 space too, as I just talked about all the blobs with all the different L2s, of course. But now the staking ecosystem is getting involved with L2s. So it's all just kind of blending together here. And I do think that within it's going to take a little while for it all to come together, very nicely. But I do think over the next few years, we're going to have such a really nice, composable, interoperable ecosystem within Ethereum of all these things. And then you won't have to worry about high fees anymore, guys. It'll just be low fees for every user, with interoperability, with composability. That is really the holy grail here. And just so many things are being worked on. It's kind of hard for me to keep track of. Even though I do a daily show, it's still hard for me to keep track of everything happening there. But yeah, again, you can check this out from Swell. I'll link it in the YouTube description below for you to do so there. Now, last up here before I finish up today's episode, just a brief comment on the markets. It's always funny when things happen, for example, Dencun going live, and then the ETH price goes down, and then suddenly people are like, why did the ETH price go down? We just shipped Dencun. It was a major, it was a major upgrade. It's the biggest upgrade since the merge. Doesn't the market realize this? Why is ETH going down? Other coins are going up, and so on and so forth. Well, I'll be the first to tell you, after many years of experience in the crypto market, it is one of the dumbest markets ever. Ever. It is such a dumb market. It doesn't work based on fundamentals over the short to medium term, especially. It works based on attention, memes, shelling points, or what people think are going to happen, what people isn't going to happen. And then there is this concept of a sell the news event, or essentially, because, obviously people were making noise about Dencun, people bought ETH, and they're like, okay, well, it's live now, let's sell the news. That narrative's over, because it's a narrative trade for a lot of these people over the short term. And they go, okay, the narrative's over, let's move to somewhere else. And that's why you see these things happening. So I wouldn't really put any stock in it, to be honest. Guys, I mean, if you're watching the refuel, you obviously know that we're all about the long term here. I really wouldn't put any stock in it. ETH is still worth almost $500 billion in market cap, guys. It's not a small asset by any means. And just because some other random assets go up and down randomly other days doesn't mean anything for ETH, guys. The market is a random walk of just stupidity, really, and it doesn't make sense over the short to medium term. But over the longer term, you hope it makes sense. It does for the most part, but there are still some things that slip through the cracks. But that just is the nature of markets. And at the end of the day, when it comes to things like meme coins, I know a lot of you guys confused about meme coins, why are they going up so much. I actually view meme coins as just the complete distillation of what makes a market tick, which is attention. If you'll notice, pretty much all of the things that go up a lot are the things that have a lot of attention. Whether good or bad, it doesn't matter, as long as they have attention. Now, when you have attention, that brings with it scrutiny as well. And that's why you see a lot of when a project gets a lot of attention, suddenly people start flooding it, and suddenly people start bringing up all the negatives about it. But when it comes to a meme coin, there's not really any negatives you can bring up. I mean, it's a meme. You look at the dog coins, you look at something like Pepe, it's a meme. It's just a coin that represents a meme. You can't FUD it, because what are you going to FUD about it? They're going to say, oh, this is stupid, meme coins are going up. It's okay, cool, it's stupid. We all know it's stupid, but hey, it's a game that people are playing, and you're bringing more attention to it by calling it stupid. And that's all you can really say about it. You can't FUD anything else, because most of these things, some of them do, but most of them don't have roadmaps, nothing like that. It's just they exist. they have a dog logo on it, or they have like a Pepe logo on it, or they have something else on it, and people like to play those games. They're like gambling games. People like to make money on them. People sometimes feel like it's the only way they can make money in this ecosystem, because a lot of the other opportunities are definitely more insider based with VCs and stuff like that in them. So I totally get it from that perspective. But yeah, I mean, when looking at the markets, guys, like just try and blot out the short to medium term stuff, unless you're playing in it. If you're trying to play in it, then yeah, you have to pay attention to it. But if you're a long-term investor like I am, you're buying ETH for the long term, you're not expecting ETH to give you a 10x return next week, right? You're expecting ETH to be slow and steady growth. It's a store of value. It's more like a savings account that goes up in value rather than getting eaten away by inflation, like a normal savings account with fiat, than something that you degen on. That's the whole point of a risk curve. ETH is one of the lowest risk assets you can buy in crypto, right next to BTC. And then these meme coins are some of the highest risks you can buy in crypto. But hey, with high risk comes high reward. That's just how these things work. So anyway, I'm going to end it there. I didn't want to ramble too much about the markets, but I just wanted to clarify things for you guys. Focus on the long term, ignore the short term noise. It literally is meaningless because it's just traders trading narratives, trading lines on a chart. It says nothing about the fundamentals, and tying the price action to the fundamentals over the short term is a quick way to make yourself feel like crap. But anyway, on that note, I'm going to leave it at that for today. So thank everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give it a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.